Hey traders, happy Monday, everybody. Let's get a quick audio and video check in. All right, should be good to go. Great to see everybody. Hope everyone had a good weekend, got away from the charts and the screens for a bit, maybe caught a good movie. I streamed the, what is it, Mission Impossible Final Reckoning. Watched that over the weekend. I was actually pretty good. They tied everything up and so walk down Mission Impossible memory lane. Good movie. Hopefully, good movie, good book, good series, something. Oh, I also caught the series on, and I think a lot of you know that Tombstone is one of those favorite movies for my husband and I. And Netflix did a documentary on Wyatt Earp and that whole time. It was excellent. It was really good. It even got Wall Street involved because JP Morgan had a vested interest in what was going on out there. So that little Wall Street angle on that Wyatt Earp and the Cowboy War on Netflix. Yeah. Let's see, Alex, you saw F1. You know, if you're an F1 fan, the views, I agree with you, very Hollywood. If you're an F1 fan, the views from the camera are amazing. The actual story is some amalgamation of Days of Thunder and Sylvester Stallone's Driven. Yeah. But the actual shooting of the first person in the cars are amazing. Technology has come so far. Yeah. As far as the racing story, yeah. House of David. Oh, Jack. Okay. Very cool. Very cool. Penguin lessons. Oh, nice, Debbie. Very cool. Yeah, Janine, I'm with you. That whole Wyatt, if you love that documentary was great. All right. So yes, it just reminds us it's really important at the end of the week to just step away for a little bit. And then come Monday, we get back to work. And Monday is the most important day, right? For us here in the Sector Secrets Mastery, what are we doing on Monday? Well, if you're brand new, you're either checking out the notes section of our trading room where we have my workflowy notes. We have the getting started videos. We also have in those workflowy notes the entire trading room schedule, the quick start videos I think I mentioned, and some general terminology. Great place to head on over to if this is your first day. Yeah, absolutely. And then in the workflowy notes themselves, I've got those getting started videos as well. So either way, whatever works for you to check out, but get really familiar with the notes and the files section of the mastery room. So many resources there, including some of the indicators that we make available to mastery members from day one. From day one, the things that you need to get started, including some hand-selected videos as well as specific indicators. Yeah, so we'll get you off on the right foot. Okay, so what do we have coming up? Well, there was no hot zone aftermath. Alfie, you checked out the Dallas Cowboy. It was just fun, right? Yeah, it was. Even if you're not a Cowboy fan. Very interesting to see. It was called Jerry Jones, the Cowboys and the Gambler or something like that. Yep. I do want to see Nobody 2. Yeah, I still want to see Nobody 2. I do. All right, so hot zone heads up. We have the new home sales at 10 a.m. We have FOMC Logan at 3:15. Now, this could be interesting because probably the biggest thing in terms of a takeaway from last week was the fact that Powell basically unleashed a Kraken on Friday in Jackson Hole, 10 a.m. within the first 120 seconds. What did he do? He opened up rate cuts for September 17, not because of the inflation metric, which, by the way, they ditched the 2%. You might say, Rob, they ditched that 2% a while ago. Agreed, but they have officially ditched that 2% metric, which is to say their models are no longer relying on that. So what he cited on Friday was jobs. So all of a sudden, every JOLTS, every initial claims, non-farm payroll coming up next week are going to take on huge importance, maybe more so than the CPI and PCE. So we're going to make some adjustments on those hot zones to keep an eye on jobs because it was the labor market that he put in the spotlight on Friday. So expectations for the rate cut on September 17 are still just hovering above 80%. And again, 80% is a big number because that's generally fully discounted. Usually, if any of these metrics are above 80 coming into the meeting, that ensures that will be the action they take. Under 80, not so much, but 80 has historically been fully discounted. So if you want a simple macroeconomic decoder ring, what does that mean? The only macroeconomic metric that matters is what is Powell going to do? And then based on what Powell is going to do, the stock market, the currency market, the treasury market will respond in kind. The mortgage market will also respond in kind. And so if expectations are for one at least to up to 3/4 point cuts. So we're looking at September and October and December, or September and October or December. So we're looking at 2 or 3 more cuts for the rest of the year. And that's not going to be overall bearish to the stock market. So keep that in mind. The bearish side is the side that, as we're in that anticipation for rate cuts, that's the one, the bearish side is the tricky side. Now, we saw what the stock market did on Friday, and I told everyone, don't worry about it. The S&P futures are at best in bullish chop. So what goes from an oversold support level in chop to an overbought resistance level, again in chop, is usually going to be defined by one of two tools that we use in the mastery. These are completely automated. You just got to read the tea leaves. Number one, are we sitting down near a Darvis level? Number two, are we sitting down near a DPMR level? On the other side of overbought and oversold, right? Oversold resistance. Are we sitting up near the top of that Darvis? Are we sitting in the DPMR gold zone? And you'll see that's exactly what we did on Friday. Bullish chop is when we look at support and resistance to contain price movement. And so I'm not surprised to see a little bit of weakness here. This is far from a drastic sell-off compared to Friday's rally. And the pullback is going to be great. If we can see a little bit of a pullback today, tomorrow, this is not going to be a bad thing. Remember, the end of the month, especially the last 3 days, are usually when the concentrated number of redemptions kick in, because people like to pay themselves at the end of the month. And we usually see these redemptions, whether that's retirees or whatnot, that's going to kick in at the end of the month. And so we'll have maybe a little bit a tendency for weakness going into the end of this month. So that's what we've got here. Choppy but bullish S&P. Let's take a look at the NAS here. The bell is going to ring in about 2 minutes. I would say the NAS is also in chop and also in bullish chop, but not as bullish as the S&P. I would also say the Dow is in chop, bullish chop as well. And take a look at those things. When you're looking for a range, when price is no longer trending, but it's going back and forth, and even the chop should be defined as bullish chop or bearish chop, right? Even the Dow has bullish chop, which means we're not moving in a trend, we're moving in a wide range, and chop sort of describes a wider range of back and forth support to resistance movement. But again, we want to favor one side or the other. There's very, very rarely an absolutely neutral market. I would go so far as to say never, but you never know. But I would say seldom is there an absolutely neutral, neither bullish, neither bearish market. There's going to be some influence from the previous trend or from the previous action that'll influence the current sideways market. It's our job to get that directional bias straight. And then that's going to lead us into our watch list building as we go into the second half of our room. So the first part of the morning is pre-market. What do we got? Really simple here at 9:29. All 4 indices are below the previous session close at 4 p.m. cash close from Friday. So that's a little bit of bearish sentiment. It's not a bearish trend. It's not even necessarily bearish chop. Before momentum, before trend comes sentiment. What are people thinking before they do anything? What is the general, I hate to use the word feeling, but what's the general feeling about the market? So slightly bearish sentiment. A lot of you will see that Bitcoin got hammered. There was a 24,000 Bitcoin sell. It was 24,000 and change that hit over the weekend. There was a whale that sold $2.7 billion of Bitcoin. This particular ledger had been this particular account had been inactive for, 5 years, and they sold a lot. And that's where we see Bitcoin driving down to. And this is something that Bitcoin's always going to deal with. The fact that people have hung on to these things and are looking at, these all-time highs in Bitcoin, and some people might want to take profit. This guy, he took 2.7 billion. So, good for him, but that's where we saw the movement. So it's not some sort of fundamental, it's nothing. I don't even know if this is part of the halving. Anyways, I don't want to go down the Bitcoin rabbit hole, but if you've noticed what Bitcoin did, that was a big whale sale that hit the ledger. All right. And that's how these things can move, right? When you have that many coins being sold at the highs, it's going to have an effect. So that's what we've got there on. And by the way, Bitcoin's been pulling back for a while. So it would be absolutely insane to say that this is the reason for where we are. I mean, remember, after hitting that all-time high, once again over the weekend, we've been moving lower in this arguably bullish chop. I still would be bullish, but you can see there's definitely a lot more weakness after we hit that. Oh, look at that. Here's a Darvas level that preceded that around 123.6. And then we formed another Darvas level up at 125. And if you're looking at that zone for resistance in bullish chop, that is a ceiling. That is an obstacle. Absolutely. So we'll keep an eye on that. What else do we have here? Oh, I think the pup wants to come in. Give me 1 second. All right, pup. Come on, puppy. Good girl. There she is. You can see the pup. Look at that. Say hi. Come here. Say hi. All right. So that's what we've got there on Bitcoin. As far as gold bonds, they are also weak here on the open. No question about that. So we see some weakness in gold. We see some weakness in bonds. Now, the bond weakness is not awful. For those of you in the long-term account, not that I'm going to get into that now, but for those of you looking at this on the time frame that we've set this up on in the room, this is fine. This is fine. There's nothing really that's a problem about it. It's not great. It's not flying like our AbbVie trade or our XLV long-term account growth trade, but this is fine. It's still well off the bottom. It just isn't moving as high as I'd like. But when you wait for those lows with a long enough time horizon, which was timed with those macroeconomic expectations that I would not expect yields to drop until September. So to be long bonds is really waiting on September and giving yourself enough time. All right. Gold also is here this morning. What do we got? Bullish chop on gold. Not a lot of clarity on the 5-minute chart at all. So pre-market as we prepare for the open, and we're going to let the first about 5 to 10 minutes go by. What's happening right now? So think about a few things that are happening in the morning between 9:30 when the bell rings and about 9:35. We're getting some early morning ranges. The most important range is the one that's going to set up between 9:30 and 10 o'clock. Aside from that, the first 5 to 10 minutes, what we're seeing is the volume coming in. We're starting to see the spreads that were once wide pre-market start to normalize. So these are basic things that we need to observe before we even get to the watch list building part of our day trading morning, right? There's only so much you can discern from the bell. So for the first hour of our mastery, we're going to focus on some short-term timeframes, but you'll also see that I'm going to keep the hourly and the daily off to the right, because when we segue out of day trading, we'll already have a pretty good pulse of what we might want to look at for swing trades. And a pullback like this with much more clear monetary policy is going to be exactly what we need to put on some more swing trades in the room. So we'll definitely build that out as the day goes on. So far, what do I know? I'm a little bit more bearish than I would be bullish for a day trade on the indices because we're below the previous session close. I don't mind looking at some Darvas levels or some HPMRs. If I'm going to be a buyer, I really need to be a little bit more conservative to manage risk on the bearish side of sentiment. If I'm going to be a short seller, I've got to wait for price to rally up into resistance. That might be the resistance of the hourly price movement range. That could be the resistance of a Darvis level. But you can see these wicks on the opening bell, which is why I never recommend traders put on a trade right at the bell, right? And then also pre-market. If you were trading the NASDAQ or the S&P pre-market, maybe 7 a.m. this morning, something like that, if you were, then what you're looking at now is at 9:30 is that big volatility move that you've got to be ready for if you've got a pre-market, for example, short on. Maybe someone got up this morning and said, Rog, I like the Darvis, or I like a mean reversion, something, right? And I'm short. Well, be ready for the crazy candle or just get flat before the bell. So there's a lot of ways to look at the day trading day, which is in futures much more 23-hour than it is that 9:30 to 4, right? So all those things we keep in mind. All right, next up, what we're going to do is take a look at our sectors. So right away, we know that bonds, gold, crude, Bitcoin, and all the indices are trading below the previous session close. And if I'm looking at 5-minute charts, I might say, well, I'll give you a for instance on gold on a 5-minute chart. And then at 10:30, we'll take a look at what kind of swings we might get. So if I'm looking at gold on a 5-minute chart, the resistance levels that I'm looking at on gold, I don't have my drawing tools. Hang on. Let's get those drawing tools up and running. What's a morning without drawing tools? All right. So here we go. If I'm going to do anything, I know there's resistance here. I know there's resistance here, right? So if I were going to do anything, that could be looking at long puts in GLD. That could be looking at GC short. But that's the resistance I'm looking at there. So prices to get up there before I have a really good risk reward on gold puts or GC. And then if price were to get weak today, which I welcome, and if it were to trade down to say this area in here, and that would be right there around 33.60, 33.59, that's another conversation. So remember, we want to focus in the morning, at least on these 5-minute charts for day trades, but just take a glance at where some of these levels are, because after 10:30, when we start a swing trading part of the morning, if we have any proximity to that Darvis, if we have any proximity to that daily price movement range, that then becomes something we can look at. All right, let's see. Sectors. What kind of sector movement are we getting? XLU is in a downtrend this morning, and bearish momentum, not surprisingly. Technology, semiconductors, communications, consumer discretionary, healthcare, energy, regional banks, and consumer staples. Those are all the bearish momentum sectors at the moment. If you take a look at screen number 2 in the room, so take a look at the room and you'll see off to the right, there are some tabs, screen, notes, files. If you go to screens, at any time you can take a look at my screen number 2, which is where we have the sectors laid out in that flexible grid, including the VIX, if you ever wanted to look at that as well. So that screen number 2 is something you can toggle on over to in the trading room. If not, home base is always going to be screen number 1. All right, so what has bullish momentum? Industrials, transports, and gold miners. So where gold may not be really grabbing me, maybe gold miners could be interesting. Look at that. Gold and gold miners are going 2 different directions. So one of the things we've been talking about for a long time in the room is if you're looking at gold, look at gold miners instead. It's the first or second best performing sector in all the major sectors and industries. And it continues to defy a lot of the chop that's partly geopolitical in gold. So if you're interested in gold, I would definitely keep an eye on gold miners. That's Newmont Mining, Agnico, Barrick, names like that, Wheaton. I would definitely keep an eye on those. All right. So we have one trend, and it's a downtrend. We have a little bit of bullishness, and that's in gold miners industrials, and transports. And then everything else is just kind of either neutral, like communications, or metals and mining, or it's bearish, like healthcare, energy, semiconductors, tech, and consumer discretionary. Mondays are a great day to sort of make sure we take a breath and let all the weekend, let all the Friday sentiment sort of play out. So if there's a good habit on Monday, specific to Monday for day traders, is it usually doesn't hurt to wait until the clearing is over. That's to say 10 a.m. Eastern. This morning, we've got new home sales up at 10 a.m. Our new home sales a big deal? Probably not. I don't think they're going to be a major metric, but they're definitely one that we'll keep an eye on going forward if mortgage rates drop with the anticipation of the Federal Reserve cutting next month. So roughly in 3 weeks. Roughly in 3 weeks. All right, so we have a little bit of weakness in consumer discretionary. Consumer discretionary is primarily going to be Amazon and Tesla. All right, Amazon and Tesla. And then even Home Depot. It's an eclectic group, consumer discretionary. It's got your tech sort of Amazon Tesla exposure. Then it's got sneakers, coffee, burritos. It's just an eclectic group. Discount clothing. It's an interesting group, but the high concentration weighted names typically dictate what's going to happen. And so that would be Amazon, Tesla, and Home Depot. All right. XLC is neutral. And if there is going to be any bullishness in tech, it'll probably be not in something with bearish momentum, but rather neutral. And here's Meta, the number one stock in communications. Here's Google. So notice what we're doing. We're taking a look at ranges in the big picture, certain commodities, certain indices. Then next, I'm trying to dig a little deeper. What indices have which sectors, and then what sectors are outperforming? So if I'm going to get bullish on the NASDAQ, I could do that, but I'd rather be bullish in XLC, which is neutral and above the previous session close. So if there's a part of the NASDAQ that's going to rally maybe in a better way than the NASDAQ itself, it's going to be one of the individual sectors within the NAS. And that's going to be, say, Google, that could be Meta. That might be some of the telecommunication names that have been outperforming. That could be Telephone, that could be Verizon, right? So we're not just looking at the broader averages waiting for clarity, because we're traders and because we're looking at an understanding of certain sectors in the big picture, we can find where the outperformers are. And if this is a new concept, hang tight, because we're going to do a big deep dive on this after 10:30 when we rebuild our Sector Secrets Mastery watch list. So I'm an old school scanner. You're going to find that. I like to look at the charts from the perspective of relative performance, find the stocks that are the relative outperformers in each sector, rank those, right? Not everything is equal. We rank them. What's the best sector? What's the best stock within it? And we go down the entire list, and then we come up with a handful of concentrated high probability names. It doesn't take but about a half an hour, but I've yet to find a single process that comes even close to replicating what a good old school relative performance watch list can do. So we'll be doing that a little bit later on. All right. As far as anything else that might be moving for us, let's take a look at industrials. That would lead us to things like GE. And the Dow's trying to climb. It's not above the previous session close yet, but one of the strongest parts of the Dow right now is not financials or healthcare. It's actually industrials. So you can see GE trying to take off. Let's take a look at RTX. Interesting. Honeywell. So notice we're not going to go to our favorite stock every morning. The job isn't what's the SPX or Tesla doing. The job is what sectors are moving higher and which stocks are participating. So for example, Honeywell is absolutely not participating. Uber, not bad, but GE and RTX look a whole lot better. But Uber looks pretty darn good. So good means, do I have some directional clarity? Starting off with, hey, simply, are we above or below the previous session close? That doesn't require an indicator. It doesn't require anything fancy. Wherever we closed on Friday, are we above or below that? So we can see there are some interesting looks as I take a look at the screens here. There are some interesting looks in GE. Now, GE would be cool. Now, GE took off at the bell. Look at how close it was to the hourly price movement range before it did it, that green zone of volatility-based support. One of the best indicators anyone could have on their charts. And if we can pull back to that zone, we may or may not, if we can form a trend in GE and get a mean reversion, a wave entry, that might be kind of cool too. All right. Question about Intel. Hey there, Jeremy. So let's take a look at Intel. What have we got? I'd probably shy away from Intel, maybe as a daily price movement range conversation, though, right? So as we kind of wrap up our morning just prep, it's going to be, yeah, that could be interesting, but this could be far more interesting. So I might say it's more of because the NASDAQ's not a relative outperformer, right? It's actually probably weaker than, relatively speaking, the Dow and the S&P. Hence, we started looking at industrials, or we start looking at transports, metals and mining, gold miners. So I'd probably say no to tech this morning, but maybe yes to swings. That could be super exciting. And that sets us up for the rest of our Monday session. Jeremy